Hello fellow traders, Marv Eisen here from Timeless Dollar Trading Academy. I want to point out two important things relative to those who use the Taylor Trading Calculator, and I hope you're one of them because it is the most accurate tool in my estimation for helping traders make successful trades and not make trades on days where trades really shouldn't be made. And that's because the Taylor Trading Calculator gives us an estimate of where prices are likely to trade on the following day. And so we're entering the week beginning June 23rd, and I want to point out, as I said, two important things relative to using the calculator. Now, number one is that last week we rolled over from the June contract to the September contract. The June contract is ESM, and the September contract is ESU. If you don't know what contract rollovers mean, I've made other videos about that, and you can also look it up on Google. The numbers relative to the new contract differ from the numbers from the preceding contract. And the numbers that I'm talking about are the open, high, low, and closing prices that need to be entered into the Taylor Trading Calculator. I'm going to show you what I mean. The Taylor Trading Calculator only requires 4 entries: the open, high, low, and closing prices for each trading day. And then the actual numbers, the calculations, are automatically calculated, and these numbers, you don't have to input anything. Everything is automatically calculated for you. And the range of the trading calculators is resistance in the first yellow column, support in the second yellow column. And that's really all you have to know. It's so easy to use this tool. 62 points between that range. 62 points is the trading range for the following day. The other thing that I want to bring out is that when we trade on weeks where there are holidays, we have to skip those dates. We don't want to average in those dates because there's no trading during those dates. So what we have to do is skip the date. And that's done by changing the date. As you can see, the date from Wednesday to June 18th is followed by Friday, June 20th. There was no trading on June 19th. And so we have to skip those days. And how do we do it? We can't just delete a row. You cannot delete a row in the calculator. And so I've made a video on how to skip those days. And that video is on the Taylor Trading Calculator page at my site, timelessdollar.com. And I'm going to bring up the top of the page. Here's the top of the page, timelessdollar.com. timelessdollar.com, Taylor Trading Calculator. Scroll down to the bottom of the page and you'll see a video how to skip rows for non-trading days. Simple, just follow those instructions, all right? So that's really the only thing you have to know when you are trading on a week of a holiday where dates need to be skipped. So now I'm going to go into an explainer for trading when using the Taylor calculator. And here is Wednesday, June 18th. And prices were coming in just prior to the market open at about 8:30 at the middle of the Taylor trading range. Are they going to go up? Are they going to go down? We don't know. Nobody knows where the market is going to trade. But the beauty of the calculator is that it's likely to trade within the confines of the trading zone. And these are 3-minute candles. There are 5 points between each horizontal line on this chart. I'm going to stop it right here. Now notice that the prices trade opened up just about in the middle of the calculator. And so are prices going to trade up or going to trade down? Now for those of you who are new to using the calculator, I'll make a blanket statement. When prices trade or open up in the middle of the calculator, you may not want to trade that day if you're using the calculator to guide, because the calculator gives you a large point range, in this case around 60 points, for where the market is likely to trade. And you can gain a great number of points. If you are a scalp trader, this might be a revelation to you. But when prices trade or open in the middle of the trading range, you might want to sit this one out, because again, nobody knows where prices are going to go. They can go up, they can go down. They're going to trade within the trading zone. They're going to trade within the trading range. But for those of you who are more experienced in using the trading zone and you want to take a chance on using it, although I've told you not to, on days where prices open in the middle of the trading range, prices opened up. And as I said, on volatile days, you wait until a half an hour to an hour after prices open to see which way prices have broken the intraday high or low in the first half hour to hour of the day. And so here we see at around 10:18, prices have clearly broken through the intraday high and are moving upwards. Are they going to go upwards all the way? How far up are they going to go? Are they going to reverse? And so I'm going to continue, and right over here. Now, if you're going to take a trade and you see prices are trading and hitting their head against the calculated resistance, you might want to think about, maybe prices are not going to trade up through the entire range. In other words, you can clone this trading range, but before you do that, think a minute. Prices traded within a range of, let's see, 60.35 to 60.72, almost 3/4, a little over 3/4 of the entire trading range. So why would you risk a trade at this point? Well, if you're going to risk a trade, are you going to risk a trade up or down? All right, I'm going to continue playing. Now, again, the trading zone, these relative resistance and support prices are important. And prices hit their head against the resistance at 60.74. And where did they go? Now, at this point, you might say to yourself, well, I've waited until 11 o'clock and I see prices traded and were rejected by the trading zone resistance. So maybe I'll take a trade to the downside. And so would that be a good trade? Would be a good guess based on your experience using the trading zone. And so where are prices going? Are they going to traverse the trading zone? Okay, there we go. There was a spike over here at about 2 o'clock. I believe it was an announcement of interest rates being held steady. So, of course, Wednesday, we don't want to trade on FOMC days because FOMC announcements are very volatile periods. So that's another reason not to trade on days where the Federal Open Market Committee announces their decision on interest rates going forward. Not a good idea. But nevertheless, where did prices trade? They traded down to the bottom of the trading zone. But again, use caution, or better yet, don't trade on days where prices open in the middle of the trading zone. Now let me take you through another day, the following day, Friday, June 20th. Now here we are again on Friday, June 20th. Prices again appear to be trading or opening toward the middle of the trading range. Prices are opening just about at the middle of the trading zone. Another day where if you are not sure, if you want to play it safe, and I suggest trading should be a conservative enterprise, I suggest you skip days where prices open up in the middle of the trading zone. Nobody knows where prices are going to trade. They can go up or down. The trading zone is certainly helpful, but I'd rather wait until prices open somewhere at the top of the trading zone, because then they're likely to trade down through it, or at the bottom of the trading zone, opening at the bottom and trade up through it. Those are days that I favor the most. And you can make 30, 40, 50 points. If you make that kind of a trade once or twice a month, isn't that worth it? That's the smart way to trade. I suggest you look at trading in that manner. I have more about that in my course on trading psychology and being conservative on my site at timelessdollar.com. My course, Trading Mastery for Financial Freedom, will talk all about that. And so let's continue through the day. Prices opened in the middle of the trading zone, gyrated up, then moved down quickly, down through the trading zone. Now again, if you want to wait until about 10:30 here, 10:30 right over here is around the 10:30 mark. And so are you going to place a trade here? Well, prices have already transpired through the whole trading zones. I'm going to make a clone of this. I'll make a clone of the trading zone, bring it down to the intraday high. And so if you are going to place a trade at around 10:30 right over here, prices have already traversed 3/4 of the trading zone. Why risk it? Why risk it? You could say, oh, I missed a trade. So what? You missed the trade, there's always another bus. And what trade was it? It was a trade that was risky and uncertain. Again, wait till the prices open at the right place relative to the trading zone, not in the middle of it. All right, so that's my video for today. Marv Eisen for TimelessDollar.com. Trade safely, use lots of patience. Thank you so much for watching, and I'll see you in my next video.